Hey guys, welcome to another episode with me, Shashank Udupa. And in today's episode, I'm going to talk to you about some differences between traders and investors. Okay, so stay tuned. Now, first you need to understand who are traders and who are investors. Now, investors are those people who invest for a long period of time, right? Fundamental investors or fundamental analysis, and they usually try to invest by looking at every other factor, market economics, macroeconomic, microeconomic, everything, and they invest for a long period of time. Whereas traders are slightly different. They do day trading or intraday trading or swing trading, which is very short term based. So I'm going to tell you some key differences between a trader and investor. Okay, so let's see. The first most important difference here is capital required. Now, what is capital required? For a day trader, he needs a lot of capital. Now, contrary to popular belief, a lot of day traders, a lot of people say when I do day trading, I can start with 10,000, 15,000, 20,000. That's not what it is. Now, if you're an investor, you can invest with 10,000 or 15,000. But if you're a trader, you need a massive capital to start off with because there are different strategies that might make you take different call options and put options, or even both call and put options at particular ratios, so that you don't lose your wealth and you make a profit. But for that, capital is required. So that is a fundamental key difference between traders and investors. Now, the second thing is capital growth. Now, this is very interesting because for long-term investors, they might keep it for a very long period of time, 1 year, 3 years, 5 years, wait for 1x, 2x or 3x. Or even if you look at it from percentage perspective, sometimes they can get 60% year on year or 18% CAGR or 15% every year they want to make on their portfolio, and they're building this portfolio for a long period of time. But for traders, it is slightly different. For them, it is on intraday or swing trading. So for them, even if they get anywhere between 3 to 5% or anything around 10 to 15% a day, for them it's considered amazing, and they will withdraw or exit that position right away. Now, for a day trader, it's not that every trading day, around 20 trading days in a month, it's not like every trading day they'll make profit, right? There'll be days where they make 10% profit, next day they might lose 15% of that capital, and then they'll again make 20% and again go down. But at the end of the month, they'll make some kind of revenue, either it's profit or loss, right? But for them, their threshold is different from an investor. A long-term investor will keep it for a long period of time, whereas a trader will exit even at 3 to 5% profit, right? Some people are greedy, they'll try to make 50, 60% and lose money. But a lot of people just are very happy with 2 to 3%. Now, the third most important thing when it comes to a difference between these two is the time horizon. Now, for day traders, for them, it's about the day trading, right? They invest in the start of the day. Either they take a call or put option, or they buy or sell on the start of the day and sell it at the evening, right? Or they might do swing trade where they buy it today and then they sell it after 1 week, maybe when the position has reached. But for an investor, the time horizon is a long period of time, mostly a year and more than a year, right? And for if you look at the way the taxes are also built in such a way, day traders have to pay short-term capital gains, approximately 15%, but investors pay slightly less tax, which is long-term capital gains, which is up to 1 lakh exempt, and anything above 1 lakh on the gain, you pay 10%. So that is how time horizon and taxes work for traders and investors. Next, we look at risk. Okay, now risk is very important because for a day trader, he's playing a very volatile market. Volatile market मतलब ऊपर जा रहा है, नीचे जा रहा है, आगे जा रहा है, पीछे जा रहा है. It is mad, right? And you're also playing with leverage. That means you're playing with more money than you can actually afford to. So the risk that a day trader takes is much more than a risk that a fundamental investor takes. Now, if you know how to do amazing risk management, and a lot of day traders know how to do very good risk management, they usually win 9 out of 10 times, right? Whereas if you look at a fundamental person who's investing for a long period of time, his risk declines over time. If I hold a stock for more than 10 years, then the chances of me going into loss is quite significantly less. Whereas in day trading, he cannot do that. Why? Because the time horizon is very short. So he has to play those risks, and it is such an interesting thing because he has to play those risks very fast and manage his time at the same time. So it is interesting what it is in the life of a day trader. A lot of emotions also is going up and down. Now, the final difference I've seen between both of them are mindset and the mentality. Now, look at the mindset of a day trader. The mindset of a day trader is very confident. He comes in the morning, 9:30, he sees what positions he need to buy. In fact, some lot of day traders find out which positions to enter one day before, and they enter these positions, patiently wait for their levels to get hit, and if the levels get hit, they're out, right? And if the levels doesn't get hit and the trade goes sideways and it starts going down, then they have a stop loss that triggers that stop loss and they limit their losses. That is a mindset of a trader, a mindset of a good trader. Bad traders, no stop loss, naked calls. They'll just be like, take one put option. Oh my God, I've lost all my money. Don't be that kind of a person. Have proper risk management and have a proper mindset to it. And don't be greedy. Why? Because they know if I lose today, it's fine. I can get up tomorrow and try again. That is a mindset. Whereas if you look at the mindset of a long-term investor, he's doing this more from a wealth growth, capital preservation. I'm trying to build for my future with a long-term goal, right? So at that point, his mentality is invest every month, SIP karke rakho, invest and then forget about it. And I'm going to keep it until it does really good returns, and I'm going to keep it for a long period of time. So he's little less risky. His mentality is slightly long term, whereas the mindset of a day trader is very short term because he has to do massive risk management in that given moment. Whereas the long term guy does not have to do massive risk management at the given moment. Now, these were some of the differences between a day trader and an investor. And I don't know which category you fall in, but it seems quite interesting on both sides, right? What a day trader does is also very interesting. What an investor does is also very interesting. Now, I want you to tell me if you know any more differences that you have seen from your lens, from your perspective. If you've seen any more differences between a day trader and a long-term investor, if you have, put in the comments below and I would love to see all of them, right? Again, guys, if you like this video and you got some knowledge from it, please click on the like button and subscribe and share this to your friends who's a day trader or a long-term investor. It's fun for them also to see this banter, right? Awesome. Cool. This is me, Shashank Udupa, signing off, guys.